kind of earnings disappointment we could be staring at? Last 2 years, we've only seen earnings upgrades from brokerages like you. But now, given what is going on in the world of commodities, which was a big contributor to these earnings upgrades, is it possible that we now begin to see earnings cuts coming in over the next few quarters, which is something the market had not seen for the last couple of years?
Yeah, so simplistically, yes. If you see our numbers in the recent quarter that reported, that's resulted in a net cut of about 2%. But it's as like you were saying, it's been hugely supported by commodities. If you were to strip out the commodity support, that number is actually much, much deeper. So to start with, you're absolutely right. I think the risks of downgrades at the aggregate level is actually reasonably high. At the broad level also is high, simply because you had a couple of standouts at this point in time. So I think that's one element of it. And that's why you're seeing, the market might be up a little bit in the recent past, but there is a certain amount of caginess or wariness in the market as it exists at this point in time. That's one element. I think the other element of earnings has been that what has been where people have, X of the commodity and the banks, right, which run a different cycle, right? But X of that, I think a lot of caution has been in terms of earnings getting cut because of margins, right? And you've seen some of that play through. But I actually believe the bigger risk and the less stated risk is what you could see in terms of demand being a little weaker. And I would suspect that would be the surprise element in terms of earnings downgrades if there were to be significant downgrades, rather than the shock of commodities and prices, which has generally been tending to play through.
One question about what you're hearing from companies, Aditya, because it's such a strange time. Globally, there is so much volatility. There is uncertainty about whether the world is heading towards close to recession, if not a full-fledged recession. And we are talking about a capex cycle fleshing out in the middle of this kind of uncertainty. Do you hear from companies a lot of confidence that they want to go ahead with capex planned earlier, or could it be a time of introspection or reassessment or being wary as well?
So let me put it this way. I don't think there has been a massive bottom-up capex build or expectation pullout over the last couple of quarters, pre all these issues in any case, right? I think what you were tending to see was a confident and a measured approach where people were talking about brownfields, maybe the odd greenfields, but I think there were very, very few people who were really going overboard or overly excited, right? In that context, I don't think too much has changed, right? Because there were specific plans, there were nearer term plans, and none of them were very aggressive plans. So I think a lot of that remains on board to start with, right? Secondly, I think a lot of the recession talk that all of us are a part of, it's more a market commentary, right, and a market expectation rather than anything that businesses on the ground are seeing, right? Whether it is the commodities players, whether it is the technology companies, So to some extent, I think as commentators we get a little carried away. The market tends to look at it very seriously, but I don't think that sense has percolated down to businesses. That said, when you're facing the specter of such commentary, I think that capacity and the willingness of businesses to commit to stuff which is, not underway or very specifically on the drawing board, I think that capacity is limited. So I'd be surprised over the next couple of quarters you see announcements of people talking about capacities in 2025 and 2028. So I think it's going to be what is in your books or what is on the drawing board. I think that continues. Let me be clear. I don't think it's a space where anyone has talked about pulling back on anything that is specifically on the anvil, right? It's just that looking beyond, I suspect there's a certain amount of caution that is coming through, but it is quite honestly very market driven. I mean, you haven't seen any data that suggests the US is in recession. So it's as I said, market commentary, which is where people are wary, and so stuff that's not on the drawing board will not come on, but that stuff that's on the drawing board will stay on. Is how I see it at this point in time.